Hello guys, in this video we try to see what's the difference between technical analysis and fundamental analysis. Most of you guys have heard about this, and most of you maybe you know a lot about this, but I want just to clarify some points. At least you will know for sure the difference. Now, technical analysis is always based on the chart and on the price. Okay? It is based also on the news and on volume, because news and volume, they are not part of the trade. Okay? Because you see the price, the stock is going up little by little, but sometimes the news comes either good or bad, and it changes the price dramatically, and you know that it is that news that changed the price, like a gap up or gap down, when the stock is going up so good, and when the stock dropped down so good. Okay, so this is what we call technical analysis. Everything is about price, about the chart, about the news, and about the volume. Okay, now what is fundamental analysis? Fundamental analysis, those people, most of them are doing position trading or they are doing investing. They need to know what this company is doing. They need to know if the company is good in terms of competition. They need to know if this company is making money and more and more and more money, and if this company is becoming bigger and bigger and bigger. They look at the earnings, if it makes money and it is more and more money. They try to see if the dividend the company give each quarter is increasing each year and each year and each year. This is what the fundamental analysis is looking for. They go to the company and they see the balance sheet. Is this company has money, like cash flow? They have money aside. When there's a problem, it can use this money to solve the problems, or to do what we call research, more research. Like, for example, if you see Apple, for example, okay, they give a dividend and they use a lot of money to do research, because this company, if they don't do research, they will be weak in competition and they will lose the market of cell phones or smartphones. Okay, so the people, they want to know if this company is still competitive, it still has a good product, the people like it, and the sales from this product is so good compared to the other companies. Okay, this is what the people are looking for, and most of these people are investors. It means they don't want to buy stock today, sell it for a few days, or 1 month or 2 or 6 months. Okay, they don't want that. They want to stay with good companies for 5 years, 10 years, 20 years. Warren Buffett is an example. He has some companies that he has never sold and he will never sell all his life. Now why? Because these companies are still giving him money and they are growing. For example, he says about Coca-Cola, he says that I know that this company in 10 years or 15 years is still producing the same thing, Coca-Cola, and the people like it, and it is everywhere. Even in the jungle, people, okay, in the jungle, you go to the jungle and you find some Coca-Cola empty bottles, and you say to yourself, how this come here? And how these people discover Coca-Cola and they don't have TV, okay, so, or cell phone, but they discover this product because of this company, which produce a lot, and in all the world it sent its product, so it is so known. It's just because this company has made a lot of efforts and spend a lot of money in advertising. It doesn't come, things doesn't come like this, stupid things. There is a plans, there are advertising, there are a lot of things that you might think. So There are some people who like a company each year is making money, so they stay with it the whole life. If the company is still competitive. But if the company is going bad and the earnings are bad and they see the prices going too much down, okay, so they will take their money out of this company very, very quick. They don't stay 20 years and then they take their money when the company is bankrupt. Okay, and you have heard, and if you go online, try to see what are the companies that go bankrupt in USA. You will find a lot of companies that go bankrupt. Okay, it's just because they can't compete. They can't compete with other companies. They can't sell their stuff. They sell little. So the investors, they took their money from this company bit by bit, and then you see it in the stock market. You should see this company. The stock is going down and down and down and down. Okay, and it's alarming. So this is how the fundamental analysis work. It means investors, they want to know all about the company and about competition, about money, about cash flow, about balance sheet, about debts. If a company has a lot of debts and she can't pay her debt back in time, this company will go into trouble. So the investors, they study this, or they ask some people who are professional fundamental analysts to check these companies and to give them reports if it is good or bad, and then they take their decision because they don't know. Okay, so for you, here is the deal. If you want to do day trading or swing trading, which is short-term trading, you don't need to see the company. You don't need fundamental analysis. If you are doing swing trading or day trading, you need only technical analysis, which is based on price, on news, on the volume, and on the resistance line, support line, all this stuff. It's mainly price. Okay, so you should decide which trader are you. Are you a day trader? Are you a swing trader, which is called short term? Or are you an investor, a long-term investor? It means you should know about the company. Okay, so thank you very much. If you have more questions, please send me an email, and it is in the description below, and I can give you more information if you have more questions. Thank you very much.